Optimized Payments Consulting. Our webinar today is Understanding and Leveraging Mobile and Alternative Payments. The webinar will last approximately 40 minutes and is in listen-only mode. We will have a question and answer session at the end of the webinar, so we've allotted about 15 to 20 minutes for that. If you have any questions during the webinar, please send them to me in the chat box or in the questions box. At the end of the webinar, we will try to answer as many as we can during the Q&A session. We will be recording the webinar, so sometime this week I'll send out a copy of the presentation and a link to the recording of the webinar. Our webinar today will be led by Anand Goyal, CEO and founder of Optimized Payments Consulting. Anand is an expert in the payments industry and has more than 9 years in the electronic payments field. He has written articles for and spoken at several merchant associations like the Merchant Risk Council and Association for Financial Professionals. Now I'd like to turn the webinar over to Anand.
Thank you, Monica. Good afternoon, everyone. And we have a lot of great information to share with you, so let's get started. As Monica mentioned, we want to make this webinar really useful for you, so we encourage you to type any questions you might have relating to mobile or alternative payments into the question box, and we'll get to as many questions as we can at the end of the presentation. So with that, let's get started. Our agenda for today is we'll give you a one-page overview on who Optimized Payments Consulting is, talk about some of the hype in mobile, and what does mobile payments really mean, and narrow our focus for this presentation to talking about two things relating to mobile. How to use mobile devices to process payments, like a mobile point-of-sale system, and how do you accept payments from a mobile device. And then we'll talk about alternative payments, how they can be used in card-present and card-not-present environments, and then get to Q&A. So a little bit about who we are. We're a consulting firm based in Atlanta, Georgia. We started 5 years ago with the singular focus of helping clients understand and reduce the cost of processing electronic payments. So that's credit card, debit cards, and as well as mobile payments. Our consultants have insider industry experience because we have worked for acquirers and processors in the marketplace. However, we're not affiliated with any acquirer processor, and therefore we're completely independent. Our clients are pretty diverse. They're from retail, internet, B2B, various verticals, and a few of our larger clients do over $20 billion in annual credit and debit card payments. And over the 5 years we've been helping clients, we've helped them save over $120 million in interchange and processing fees, as well as help them streamline their payment operations. So that's about us. Now let's jump right into mobile payments. Mobile payments means a lot to many different people. So let's narrow our sort of definition for this presentation. And mobile technology has been an important part of payments industry for over a decade. So there have been dedicated wireless terminals that have accepted credit debit card payments for a long time now, and they're still available. But as you all realize, the smartphones become ubiquitous, and they become a critical part of our daily lives. And their computing capacity is now being leveraged to innovate many ecosystems, including payments. So when people talk about mobile payments, they can be talking about mobile bill payments that you might do through your bank's, an application you download from your bank's website onto your mobile phone, mobile commerce, mobile person-to-person payments. But I think more people are talking, when they talk about mobile payments, they're talking about using mobile as a device to process payments, like a mobile point-of-sale solution. Whether you're using an Android phone or an iPhone or an iPad, they're using a mobile device to process payments. Or people are talking about using mobile, your phone, as a device to make payments. So for today's presentation, we're going to narrow in and talk about the last two items, which is using mobile as a point-of-sale solution and using mobile to make payments. But let's talk about the first, mobile POS. To understand mobile POS, it might be helpful for everyone to have some sort of background and sort of sense of what do various kinds of payments cost today. Here we have listed, based on some research we have done ourselves, as well as some data that we have culled from First Annapolis and Nielsen, we put together a list of various payment tenders here and calculated the effective cost based on a $100 transaction. If you are a merchant, whether you're in the retail environment or e-commerce, the cheapest way for you to get paid from anyone is likely going to be ACH. And there are many nuances to all of these payments, but this is statistics based on average results. So obviously, your effective cost may be higher or lower than the numbers that are presented here. So if you move from left to right, you look at all the various payment tenders and they get more expensive. So you have ACH, gift cards, private label, debit that's regulated. You have PIN debit and signature debit that's unregulated, co-branded credit cards. You might be surprised to find cash on this list. So for retail merchants who accept cash, there are a lot of costs. This includes direct and indirect costs. So the cost of counting all the cash, the time it takes in a lane for a cash transaction versus a non-cash transaction, shrinkage, armored car services that you have to take your cash to the bank, and the bank fees that are charged to deposit your cash. And then you have general credit cards, alternative payments, check guarantee services, rewards cards, and American Express. So just kind of as a background, keep this in the back of your mind, that this is the way various payment tenders cost merchants today. And then when we start talking about mobile point of sale, it's important to realize whether you're talking about mobile point of sale or any kind of alternative payments, beyond cash and checks, there are really four ways businesses, there are four main funding sources, four places where you go get money. You can have money residing in a prepaid gift card. It could be a physical gift card. It can be a virtual gift card. It could be an application like the Starbucks app that you download to your phone. So money resides in prepaid vehicles. Money can reside in instant credit. So it could be private label credit cards that you get from your department stores like Macy's. Or it could be instant credit like Bill Me Later. That's a funding source. Another funding source is your bank account. Whether you hold a checking account or a savings account, there are a number of companies that try to link merchants through their payment vehicle to your bank account. So companies like Dawala, Mazuma, SafetyPay, SecureVault Payments, they basically all facilitate payments from your bank account to the merchant. And then finally, you have credit and debit cards. So when you look at mobile payment options today, which we're going to dig into in a minute, whether you're talking about PayPal here or Google Wallet or Amazon Payments or Square or Intuit, they're really tapping into credit cards and debit cards that you have stored with them. They're processing credit and debit cards. And here on the top, this is where traditional processors play. And they also play with the processing gift card transactions. So this is important to kind of keep in the back of your mind as you're thinking about mobile POS. It's basically instead of using a dedicated wireless terminal, you're using a smart device. You're using some sort of a tablet, or you're using a phone instead of a dedicated wireless terminal. And most of the mobile processing companies, they're using existing payment platforms. They're using credit and debit card rails. And now let's talk about what you hear a lot about these days is mobile payments and mobile processing. Mobile POS is a great option, a fantastic option for micro and small merchants due to merchant aggregation. And let's talk about this. Micro merchants are those merchants who process less than $25,000 in credit and debit card sales per year. And small merchants are those that process less than $100,000 in sales per year. And merchant aggregation is companies like Square, PayPal, they do merchant aggregation. They have a singular merchant account with their processor, and they give you sub-accounts. So when you want to enroll with Square or PayPal, they can turn that around really quickly because they don't operate like traditional processors where they have to set up an individual account and they have to do thorough background checks. Whereas a company like Square, they can quickly enroll you and they give you small, very low velocity limits unless you go through a full underwriting process, meaning if you go with Square today, unless you provide them with a lot of documentation of your previous merchant accounts and your merchant history, they'll give you a new account that allow you to process a small amount of credit card transactions until you build up history with them. Whereas if you go, so that's easy, it's a small risk for them to manage. And it's also, there are a lot of differences with, in terms of setting up a sub-account versus setting up an individual merchant account. So it allows them to enroll small and micro merchants really quickly. And you know, these merchant aggregators, they're really growing the market size by allowing anybody to accept credit cards and debit cards. So you might have had in farmers markets where they didn't accept credit cards. Now with the ease and the relatively lower cost of accepting credit cards, they're starting to accept them. So you have a lot of micro merchants that never accepted cards, but because it's easier and faster, they're starting to do so. So they're really increasing the market size. And they have simplified pricing. So instead of in the past having complex pricing structures, whether it was qualified rates and mid and non-qualified rates or interchange pass-through pricing, with all the various fees, they've kind of simplified all that into a singular rate for card-present environment, which is we're going to charge you 2.75% for all of your transactions. Visa, MasterCard, Discover, and American Express. So that's really appealing to small and micro merchants. And out of this is a study that we saw, we looked at a few years ago. Out of the 6+ million merchants that are in the United States, about 87% of them process less than $100,000 in card payments a year. So you have a lot of merchants that are doing less than 100,000, and then you have some, you know, medium, large, and ultra large merchants. So vast majority of merchants are really small, and services like Square and PayPal is appealing to them. And let's talk about individual players that you might have heard a lot about. On this slide, you probably recognize a number of these names. We'll go through them. Square is probably the most popular, given the background of the founder, the venture capital money they have received, and their recent partnership with Starbucks and the money that they've received from Starbucks. But in addition to Square, there is a product from PayPal, product from Intuit, Verifone, and then there's also Pay Anywhere. And they all share some similarities. But in essence, all of these providers, they allow you to download an application onto your iDevice or Android device and add a dongle to your device and start accepting transactions in a card-present environment. And you can also key into your transaction, but for which you have to pay a much higher rate. So if you go on iTunes today, you'll find 72 apps for credit card processing, and there are plenty more coming. So when you look at the various providers, 3 of them have options where you can pay a fixed monthly fee and either pay a percentage fee in the case of Square, or pay a slightly lower percentage fee in the case of Intuit, bill payment, or Verifone sale. And if you pay no monthly fixed fee, you just get a flat rate of 2.75 in the case of Square. And that rate applies to Visa, MasterCard, Discover, and American Express, and it's similar with PayPal. Whereas if you were to go with Intuit, you have to get your own American Express agreement and whatever rate that they give you. And with Verifone, it's 2.95. With all of these providers, they charge you a much higher rate if the card is not present or the card is keyed. And those rates listed are on the right. So for card-present environments where you're actually swiping the card, these mobile POS options are really cost-effective for micro to small merchants. I wouldn't say they're effective for card-not-present environment, and we'll talk about that on the next slide. And Square, last week, they announced a new payment option whereby merchants, they can pay a flat fee of $275 and get their monthly sales up to $20,833 at no additional cost. So you can process sales from 0 to $20,833 for $275 with no additional monthly fees, product fees, or anything like that. And this kind of option would be compelling to anyone who did $120,000 in annual sales to $250,000 in annual sales. And there are a bunch of footnotes that you guys can read, but that's a very interesting option. And then Intuit and Verifone, you can buy down your rate for swipe transactions by paying a monthly fee of $12.95 or $9.95. So these are the dominant players, but like I said, you can find about 60 other players online who can provide mobile POS services, but they have similar kind of structures. On the next slide, so what is the business model for all these providers? Because it's very similar. All of these companies are subject to the same interchange rates that are defined by Visa, MasterCard, and Discover. So they play by the same rules as the traditional processors that you're familiar with, whether it be First Data, Chase Paymentech, or Elavon. The business model is the Durbin Amendment has significantly changed the landscape and the cost of card processing, specifically debit card transactions. So as most of you know, starting in October of last year, regulated rate for debit cards is 5 basis points and 22 cents. Now today, Visa processes more debit transactions than credit transactions because that's been a trend that more people are using their debit cards for everyday purchases. But in terms of total sales volume, credit cards still make up a greater dollar sales because credit cards are typically used for higher ticket purchases. So what that means is if you have more debit transactions, if you have a lot of debit sales, when you add in the cost of debit with the cost of credit and you blend them together, for swipe transactions, the weighted average interchange assessments cost in a retail environment is below 2%, way below 2%. And so when these providers offer a single flat rate of 2.70, obviously they're making money there. So a key factor for them to really succeed is to scale a lot of merchants onto their aggregation platform. And that is why we're seeing and you're going to see more of innovative pricing options from these players like Square. And I suspect you'll probably see something from PayPal here in the near future. So that's the business model. So what does that mean for you individual merchants looking to see how you can leverage mobile POS in your environments? So it's great, as I mentioned earlier, for micro to small merchants, and it's also a decent option for larger merchants who have a short-term or a small need for mobile processing. Whether it's a isolated incident where you need, accept mobile payments at a conference for training, or you have a division that does a small amount of mobile transactions. However, it's not a great option if you plan on doing mobile at your point of sale in a bigger scale, whether you're talking about number of locations or dollar volumes. In that case, you probably want to look at some of the existing players, the existing acquirers and large ISOs who can offer you a mobile solution that integrates with Android and iDevices, and they can give you more competitive pricing. So mobile POS is great in a retail environment. However, it's really not good, and it's really not intended for card not present or keyed environment. So the rate of 3.50, it's pretty high if you're a large organization. If you're small, this is fine. But if you're a large organization, a rate of 3.50, and if you're going to be doing a lot of card not present or key transactions, you can have a better solution like a virtual terminal that's offered by most processors. Great. I hope that makes sense. And if any of this is confusing, please go ahead and type in a question into the question box, because we welcome your questions and be happy to elaborate. So now let's switch gears. We have talked about mobile POS, using a mobile device to process payments. Now we're going to switch gears on how to use a mobile device to make payments. Very different concepts here. And for your merchants out there, they're predominantly on this webinar. As merchants, you're probably thinking of, how do I accept mobile payments from my customers if they want to use their phone to pay me, the merchant? Here's some background and some concepts we want to make sure you understand. Today, there are 5 dominant technologies for mobile phones being used as a payment device. And let's talk about each one of them and talk about what's going on with some of the upcoming technologies. You have SMS and MMS transactional payments. SMS doesn't require a smartphone. It can work on any phone. It's typically used for digital goods, donations, entertainment, and it's built to your mobile. It's built to the mobile carrier. Think about when we had Hurricane Katrina in New Orleans, where we had the devastating earthquake in Haiti. A lot of people made donations by sending a text message to a particular number, and they donated $10 or $20. So those are examples of where SMS works, and it works fine, and anybody can participate. And those fees are charged. Whatever you charge using SMS is billed to your mobile carrier. Another payment technology is direct mobile billing. And this is whatever you buy from a merchant through your phone is billed directly to your mobile provider. And that's typically an option at merchant checkout pages. The first 2 payment technologies, mobile technologies, are really popular in Asia and in some places in Europe. And you don't find that a lot here in the United States, except you find isolated instances of donations through SMS. What you do find in the U.S. is mobile web and apps, and this is where websites are optimized for mobile browsing, and you have mobile checkout pages that are optimized for mobile checkout, and you also have downloadable merchant-driven apps like the Starbucks app, or the Target app, or the Amazon app, where you can download retailer-specific applications. You have an account that you can log into, and you can use those apps to shop and to pay. So that's kind of dominant today. And what's becoming in the market, what's coming out in the marketplace, and will be even bigger in the near future, is cloud-based wallets and phone-based wallets. Now imagine, if you're a typical consumer, you might have loyalty to Starbucks, and that's great because you're going to download the Starbucks app. But imagine if you shopped at Target, if you shopped at Macy's, pick your number of retailers in a given month or quarter or year. You don't necessarily want to download every merchant's application onto your phone. That would be a lot of applications. But instead, you may want to have a wallet that you could use across all of those merchant types. So what you see today, coming out today, and that's being experimented in the marketplace, is cloud-based wallets and phone-based wallets. and let's talk about them a bit more. So a cloud-based wallet is a wallet that basically exists in the cloud that can store one or more payment credentials, including it can store your credit card information, your debit card information, your prepaid account, your loyalty cards, as many different tender types you carry in your wallet, except for cash. It can even store your checking account information. And whenever you get ready to pay a merchant, you can say, okay, I'm going to pull out my Google Wallet. I'm going to pay the merchant with a Google Wallet. All they know is you're paying with a Google Wallet. They don't know what's behind the scenes if you're going to be using your credit card or your debit card. So within Google Wallet, you can say, for this transaction, I want to use my debit card. For that transaction, I want to use my credit card. For this other transaction, I want to use my bank account. So Google Wallet is a good example of a cloud-based wallet, as well as Amazon Payments and PayPal. And Apple Passbook that just came out, and I imagine they'll be expanding that and enabling you to put different payment credentials on there. So the important thing to note there is that all of your card information is securely stored in a cloud somewhere, and you're simply accessing that wallet through an application on your phone, on your mobile device. That is different from a phone-based wallet, whereby all the payment credentials are being stored securely on the phone itself. And an example of that is ISIS. And all the credentials, like you could have your credit card and your debit card stored on your phone, on the phone wallet, and you can identify which payment vendor you want to use from that phone wallet, and you transmit that information typically through NFC, which is Near Field Communications. And ISIS has been experimenting with that in Salt Lake City and Austin, Texas. And so is Google Wallet. They've been testing their solution at the point of sale, as well as PayPal. So you're going to see more of those solutions coming out and becoming dominant in the marketplace. And you're probably going to see proliferation of near-field communication wallets in the next couple of years, because there's industry mandates from Visa, MasterCard that acquirers have to be NFC ready by April of next year, EMV and NFC ready by April of next year, and then merchants have to be ready by 2015, EMV compliant. So I'm throwing a number of different terms there, but basically there is momentum behind cloud-based wallets and phone-based wallets that'll be coming out that are already out in the marketplace, are being tested, and you'll see more of them in the near future. So I won't spend a lot of time on this slide, because as all of you know, we all carry around smartphones, and we understand how critical they are to whether it's communicating, whether it's email, whether it's entertainment, and it's natural that it extends to payments as well, because we carry them around with us everywhere, and it's just natural they're going to extend to payments. So what does that really mean for you as a merchant? There's a lot of frothiness, and there's a lot of percolation in the marketplace about using mobile phones as payment devices. And there's certainly consumer interest, but consumers aren't ready in wholesale to ditch their cards because the market's still trying to work out which technology and business model makes the best sort of sense. Individual merchants are trying to figure that out, and then you have third-party providers like Google. They're trying to figure out which business model is going to work best in the marketplace. And then also you have these NFC and EMV mandates that are coming for acquirers and merchants in the next few years. So what it means for merchants is that they're really going to evaluate the profile of their customers to see if there's a real demand for accepting mobile payments. An example of that is, Starbucks looks at their customers, and they looked at their loyalty program, and they looked at enhancing their customer experience. So it's kind of a holistic approach. How do we enhance our customer experience, make our checkout line faster, and make our rewards program better? And they came out with their application, which you can download into your Android or iDevice. And you load your prepaid card on there, and it's a great solution that works for them. That kind of prepaid solution may not work for other merchants. So it's really important to really look at the demographic and the preferences of your customers to see what it is that they want. And is it let's go on to the next slide. And if there's a significant interest from your customers, then you may want to look at building a custom app for Apple OS and Android. And as there's a consultant out there who always says, the one who enrolls is the one who controls. What that really means is if you decide that a custom application is the best thing for your customers, then you can allow your customers to download your app, and you can store their payment credentials because you enroll them as a customer into your application. Then you can also influence how they pay you. You can influence if they pay you with a credit card or with a debit card or with a ACH transfer, because you can offer them different loyalty points or different incentives based on how they pay you and how you set up your application. Starbucks set up their application such that the only way you can pay Starbucks when you buy a coffee with their app is through their prepaid balance. If my balance runs to zero, I can reload it with a credit or a debit card. But once I reload it, the only way I could pay Starbucks is through the prepaid account. A custom application is also an opportunity for you to engage your customers and provide them with information and services beyond payment. So going back to the Starbucks app, I can use that app to find the closest Starbucks and get information on different beverages, right? I can download an Amazon app and buy anything that Amazon sells on the app and check out as well. So because you build the application, you can also influence how customers engage that application. And then if you're looking at mobile acceptance in your retail environment, well, there are companies like PayPal and Google that already have retail solutions. You may want to look at them. So we've talked about using mobile as a point of sale. We looked at using mobile as a payment device. And using mobile as a payment device, typically works well in a retail environment. And in an online environment, you probably want to look at alternative payments. So using mobile as a payment device, it's typically oriented so far in retail environments. But if you want to look at online environments, you may want to look at some alternative payments. So this is a slide you saw earlier. If you want to look at alternative payments, in each category, each of the funding sources, you can look at offering gift cards, private label cards, instant credit. And obviously, this is influenced by what kind of business you are. But if you want to offer ACH payments, there are all the various players offering ACH payments. And if you want to look at other payments, you can look at PayPal, Amazon, and Google and Square. So most of the alternative payments rely on the credit, debit, ACH rails. And accepting alternative payments can also lift your sales. So beyond being an additional payment tender type, there's a lot of research that shows if merchants offer new payment options for their customers, that they typically see a sales lift. And that's because if you offer multiple payment options to a customer on your checkout page, if a consumer sees a payment option that they like, they're more likely to transact with you. And also we've seen alternative payments can also end up lowering your overall cost of processing electronic payments. Because ACH payment options typically tend to be significantly lower than credit card payments. And if you're looking at online mobile acceptance, like having an alternative payment on your mobile checkout page, you may want to look at one of these three: Amazon Payments, Google. It's actually Google Wallet or PayPal. And if you're a merchant of size, if you do more than 100,000 in sales a month, then you can get pretty competitive pricing. And that was the last slide. I realize we're coming up to the 40-minute mark into the presentation, and we want to give everybody plenty of chance to ask questions. So guys, go ahead and type in questions in the question box or the chat box, and we'd be happy to get to your questions and maybe elaborate on some of the slides that we showed. I will wait. Don't be shy. Wait for some of the questions to come in. But now keep in mind, the entire presentation was oriented for merchants in the United States. We're really talking about mobile as a POS device and mobile as a payment device in the United States. So if you have questions outside the U.S., there was nothing in here that really addressed that, and we could take that offline. So we got a bunch of questions coming in, so let's get started. So do you think retail relationships with customer means that more merchant wallets will win over mobile telco wallets? So what I liken that to is similar to online bank payment versus payment at a individual biller site. So let me give you an example. So I bank at Wells Fargo, and I can pay all of my bills by logging into Wells Fargo, putting in billing information for my utilities, water, credit cards. I can do everything at Wells Fargo because that's where I bank. That's kind of like a telco wallet. Or I can go to an individual biller's website, so I have an AT&T phone. I can go to AT&T website, log into my account, put in my banking information, and get money withdrawn directly from my bank account. And I liken that to an individual retailer having their own sort of wallet or their own relationship or their own sort of application. So what's going to win out in the end? There's opportunity for both of them to coexist together. It's kind of like the 80-20 rule. So if you're a retailer, you're going to have, your 10 to 20% of your customers who are your best customers, and you derive majority of your revenue and your profits from those 10 to 20 customers, 10 to 20% of your customers. Those customers are more likely to download your application and interact with you through your and have a relationship with you than the remainder 80% who might opt for the telco wallet. So it makes sense for retailers to really craft a solution or craft an application that speaks to their best customers. And that's kind of what Starbucks did. If you buy coffee infrequently, you're not going to download their app. But if you're a regular customer, it makes a lot of good sense. And I am a Starbucks customer, and I downloaded the app. And it's because I interact with them frequently that it makes sense for me. So if you're a retailer, identify some of your best customers and design a solution, a way of managing that relationship for your best customers, and try to engage them because they're going to drive the most profits for you. And leave the telco wallets for all the other customers who visit you less frequently. So we have a question here. Are ACH and credit card payment options listed also available for online payments? Yeah, if I understand the question right, are ACH and credit card payment options listed available for online payments? Yes. So some of the alternative payment types we listed, like Google Wallet, PayPal, and Amazon payments, you can also get them for your online environment if you have an e-commerce site. So another question is, was there a limit of use the Square payment month fee structure? Oh, yes. So you can go to Square's website and you can find all the details. But basically, the way Square has structured it is, if you are a merchant that does less than $250,000 in card-present sales, you can pay $275 a month to process up to $250,000 in annual sales. So if you take $250,000 in annual sales divided by 12, that translates to roughly $21,000 in monthly sales. So basically that means is if you are a merchant with card swipe transactions that are equal to or less than $21,000, then the fixed fee makes sense. And if you go over that, then it's the fixed fee plus the 2.75% rate for transactions above $21,000 in a given month. So one of the questions is, what are some of the security measures that are in place for the cloud wallet? How will customers be sure that the transaction won't be intercepted or password compromised? So that's one of the things that, you know, these various players in the marketplace that they're doing is building a lot of security and encryption around cloud-based wallets. There are a number of measures. One is, if you take Google Wallet, you need a user ID and password to log in and set up credentials within your Google Wallet. And then once you have the Google app on your phone, you need a password to get into your phone, to get into the application, excuse me. And in terms of how can you be sure they won't be intercepted, you know, I think this is where they're relying on various technologies, whether it's reading barcodes or NFC, to transmit that information from the mobile device to the point of sale. And I don't know the technical jargon that they use in terms of mobile security, so I'm not going to get too detailed, but I think you can find some of that information on Google Wallet's website. So another question is, are there regulations in place to protect customers for fraudulent activity? There would be similar measures in place, and this is an evolving sort of marketplace in terms of where the liability lies. But currently, as we understand it, if you have a credit card or a debit card within any of these cloud-based wallets, or even if a phone-based wallet like an ISIS, the liability still is with the credit card company. So and that may change in the future, is if the card is compromised or there are fraudulent transactions, you can still ring up your card company and they will cover you for any of the fraudulent transactions. So someone asked if they could get a copy of the PowerPoint deck. Absolutely. Monica is going to be sending out a copy of this entire deck, as well as a link to the recorded webinar in the next few days. Let's see how we're doing on time. We have a couple more minutes to see if we had any other questions come in. Great. Thank you, everybody, for attending. If you have any more questions, go ahead and type them into the question box or the chat box. We'll wait another minute, and if there are no other questions, then we'll bid everyone a great day. Fantastic, guys. If you have any other questions, you see my email address and phone number here as well as Monica's. Feel free to email us or give us a ring, and we'd be happy to follow up with you. Thank you, everyone, and have a great day.